Malaysia's jobless rate climbed to 4.8% for the month of June after 4 consecutive months of declines. According to the Department of Statistics Labour Force Survey, 768,700 people are unemployed in the country. Malaysia reported an unemployment rate of 4.5% in May. Chief Statistician Datuk Sri Dr. Muhammad Uzair Mahidin said the labour force situation in June was challenging amid the country's efforts to flatten the surge of COVID-19 cases. The number of employed persons in June declined by 0.5% to 15.3 million persons, with the employment to population ratio falling by 0.4 percentage points to 65%. Year on year, however, the unemployment rate was marginally lower than the 4.9% reported in June 2020. The inactivity in the labour force during the month also translated to a lower labour force of 16.07 million persons versus 16.1 million persons in May, the first decrease of labour force recorded since April 2020 when the pandemic hit the country. Accordingly, the labour force participation rate was lower at 68.3% compared with 68.5% in the preceding month. Genting and Genting Malaysia's share prices jumped today as investors cheered the easing of restrictions for fully vaccinated people. Yesterday, Prime Minister Tan Sri Muhyiddin Yassin announced that starting tomorrow, more leeway will be given to fully vaccinated people, especially in states that have progressed into at least Phase 2 of the National Recovery Plan, including Pahang. Individuals who are fully inoculated against COVID-19 in these states may dine in at eateries, take part in non-contact outdoor sports and exercise, and participate in local tourism. At the close, Genting saw its shares rise by some 4% to RM4.73, valuing it at about 18.3 billion ringgit, while Genting Malaysia was also 4% higher at RM2.82 for a market value of 16.75 billion ringgit. According to the Ministry of Health data, some 8.77 million persons, or 26.8% of Malaysia's population, are fully inoculated. They are among the 15.77 million people, or 48.2% of the population, who have received at least one dose of the vaccine. Dagang Exchange, or DNEX'S, says its subsidiary Ping Petroleum UK is acquiring the remaining 50% stake in the AVALON oil field from Sumitomo Corp's unit Summit's Exploration and Production for $17 million, or about 71.72 million ringgit. The deal is set to stem from Sumitomo's intention for its subsidiary to shift away from the fossil fuel business and Ping Petroleum's decision to avoid any potential conflicts which may arise should the 50% stake be sold to a third party. The DNEX'S said in a Bursa Malaysia filing today that the AVALON oil field, which was initially discovered in May 2014 and further appraised in July 2017, lies in the UK North Sea at 120 kilometres northeast of Aberdeen. Under the sale and purchase agreement, Ping Petroleum will acquire the stake for an initial cash consideration of $5 million with further contingent payments which will lead to the total purchase price of $17 million. The purchase consideration will be funded by internally generated funds. The DNEX'S expects the deal to be completed in the third quarter of 2021. Its share price slid 1.2% to 81.5 cents, valuing the group at about 2.51 billion ringgit. CREADOR has announced that it is making a foray into India's fast-growing quick-service restaurant or QSR sector with a strategic investment of $73 million or 308.35 million ringgit in Sapphire Foods India, one of the largest franchise operators of Yum brands in the Indian subcontinent. Sapphire Foods India currently operates 437 KFC, Pizza Hut and Taco Bell restaurants restaurants in India, Sri Lanka and the Maldives. The private equity firm said the investment will be through a combination of direct investment into Sapphire Foods India and a secondary purchase of shares in the company. It said this was the ideal time to be investing in the QSR sector in the Indian subcontinent, with the pandemic having spurred a transformative change in consumer buying patterns. According to CREADOR founder and CEO Brahma Vasudevan, consumers there are migrating from the independent food sector to internationally recognized brands like KFC, Pizza Hut and Taco Bell, which emphasize on food safety and hygiene and omni-channel accessibility. He said QSR is the fastest growing segment among food chain formats in India, where global QSR brands dominate, and the market, which has been growing at 19% in the last few years, is expected to grow at over 20% over the next 4 years. The Malaysia Competition Commission, or MYCC, has fined 7 warehouse operators a cumulative 1.04 million ringgit for price fixing. The watchdog claims the 7 colluded to set the charges for handling services for long length and heavy lift of import and export cargoes between May 2017 and December 2019. This is an infringement under Section 4 of the Competition Act 2010. According to MYCC, the warehouse operators are SAL agencies, WCS Warehousing, Regional Synergy Malaysia, Extrasim, Pioneer Pack, Prima Warehousing and Inter-Ocean Warehousing Services. The penalties respectively imposed on them are not more than 10% of their worldwide turnover and range between 26,363 ringgit to 336,369 ringgit for each company. MYCC said that in the process of determining the penalty, it has considered the impact of the current economic situation together with the presence of mitigation and aggravating factors. It directed the 7 to independently determine their future charges. The Commission's Chief Executive Officer Iskandar Ismail also advised companies that are currently involved in a cartel to approach MYCC via leniency regime application or any other appropriate scheme as provided under the Competition Act 2010. He said MYCC's door is always open for parties who may want to seek redemption.